Hello, my friends. Welcome back to Crypto's News on this very special day. Man, do we got a show today. Well, we always have a show every week, a weekly wrap-up of what's going on in crypto. But today is a big story. Ethereum, after 4 years, touching all-time high. We're going to dive into why. We're going to dive into what's coming next, and plenty more. So you're going to want to stay tuned, guys. And remember to hit that like button if you're just joining us. Please remember to subscribe if you're new to the show and you want these updates on a weekly level of what are the most important things going on in crypto to stay on top of things. And yeah, grab yourself a nice beverage and a seat. We're going to get into things, starting off with our meme here. And I think this is important because it is something that comes up oftentimes, especially when I got started in crypto. When I first got started with Bitcoin back in 2015 and recurring every single year constantly, right, was the story of Bitcoin being dead. And we're seeing similar also with Ethereum, where it's been the story that Ethereum is dead. There's going to be some other coin, some other blockchain that's more innovative, whether it's HBAR or Solana, you name it, that would be usurping Ethereum, the queen of crypto, the unicorn of crypto, and its place. And it has just not been the case. And in fact, we've seen a huge resurgence in ETH inflows recently into ETFs, picking up again today, into purchases from new reserve treasuries, like we're hearing from SharpLink, SBET token, or we're hearing from Tom Lee's company. So it's this new kind of demand that we're seeing for Ethereum, and the stage is being set for it to climb much higher, along with much of crypto, because of new policies, I should say, that are more welcoming to crypto into all sorts of investment accounts, retirement accounts, laying the groundwork to allow for employers to offer options for folks to passively invest into different cryptocurrency funds. That's going to be coming up over the next few years. So I think it's going to be an exciting time to be in crypto if you really like up only. These are products that will be driving really a gradual upslope, but a sharper upslope than what we have been used to. That's why I've partly been saying I think the 4-year crypto cycle is dead, and you're hearing more and more people talking about that as well now, is that there still will be corrections and cycles, like I've mentioned. We're going to have times where the euphoria explodes, where the greed is much higher than the fear, and the price will reflect that, and it will go up a lot. And there will be trading opportunities, at least swing trading opportunities for the traders out there. But by and large, if you're just hodling, I think the trajectory, as it has continued to be, will be up, but even sharper than we might have expected prior to this. So yes, I don't think it's going to be entire 4-year cycles. There still will be peaks and corrections that will happen, but I don't think we're going to see these huge 90, 80%, 75% drawdowns that we've seen in the past. We're kind of in a new era here with this financialization, the Wall Streetization of cryptocurrency that, took a few years to come, but really is the fastest growing asset class that we've ever seen. So props to you guys if you've had those diamond hands and you've been on board. And I think this applies to Bitcoin, Ethereum, and some of the top names. So I'm not just singling out Ethereum here at all. Hey, good to see you. I'm glad you got to make it out today for the live. I know we missed you on the last one, Renee. Really glad you could. And yeah, we're all celebrating on X, the Ethereum all-time high. A lot of folks are celebrating already, but depending where you're looking for your prices, we have hit it already, we have touched it already, we have surpassed it already, or we're slightly below that. Actually, on some of the top places to check out the prices, we can see that Ethereum is still not at its old all-time high. So here's on coinmarketcap.com, all-time high, November 16, 2021, 4 years ago. It feels like ages, honestly. It feels like even longer to me. But we're still down, according to CoinMarketCap, 1.3% off of the highs, which would be putting us at $4,891.70 before we hit that. Right now, we're sitting at $4,815.25, according to CoinMarketCap. And if we head over to CoinGecko and their view of the price based on the exchanges that they're looking at, it's going to be at $4,828.05. And we are still down 0.6% off of the high that they have labeled at $4,878.26. Point being that it really depends where you're getting your data from. There is no centralized source for this data, and I think that's a good thing. There are on-chain metrics we can look at as well, such as Chainlink that does some of this work for price derivation for Ethereum, but pretty much we've, according to X, surpassed the all-time high already, or broken it, what they're looking at. Anyway, yeah, we had even like Brian Armstrong of Coinbase come out and say congrats to those who are celebrating. I know I'll be celebrating today. It's Friday here in Central Texas, and I think a dinner would be nice, just like a nice dinner. Maybe a glass of wine would be lovely in order. Maybe one day we can have a whiskey on the show like we used to back in the day. Hey, what's up, Hawkeyes? It's good to see you here as well. But yes, definitely a special day. It's been a long time coming, 4 years, and like I mentioned and alluded to in the title of this video, what comes after we hit all-time highs in crypto is what's called price discovery. No one really knows how to truly value what this means, the Wall Streetization of crypto, seeing Wall Street getting attracted and trying to build on the blockchain, namely oftentimes on Ethereum. What does it mean to move all stocks and tokenize everything? What is the ultimate price when inflation is continuing to explode? No one really knows. So that tends to drive the price up into what eventually does tend to become correction territory. So while you're seeing this price right now, $4,128, if we enter this price discovery area, which looks quite likely, we don't know if we're going to be hitting $10,000 in the next week. We don't know if we're going to hit $15,000, although I would be frankly scared if we did hit that. So I'm not the kind saying, hey, it might not be wise to take any profits. In fact, I think when you see these crazy things, maybe that is the time that you want to go back into some Bitcoin if you are holding Ethereum or something else that is spiking a lot, especially as Bitcoin has somewhat taken a step back here. So we also take a step back and we go back to the front page here of CoinGecko. We can see that Ethereum is the top climbing coin here in the top coins, in the top 10 coins, up 8.8% in the last 7 days, whereas we have Bitcoin down 0.6% on the last 7 days. So after it hit its all-time high was at $124,000. It has since fallen back. And there are reasons for that. There were fears that the Federal Reserve was going to be more hawkish, and rather than lowering rates, it would be raising rates, which could be catastrophic for risk assets. And so Bitcoin was trying to price that in and kind of brought the market back down. But Ethereum hasn't really dropped that much, has it? In fact, it's up 13.3% over the last 24 hours. Bitcoin is also up 3.7% over the last 24 hours and does look like it's also going to be reversing and climbing higher. So seeing Bitcoin and Ethereum in tandem climbing higher is something that drags the rest of the market with it. It's just been the game. So that's something I expect to be coming. And the reason for that has to do with the rather than hawkish tone raising rates from the Fed. And we had different governors come out and alluding to that might be the case. They would vote against some sort of lowering of rates recently. That's what caused the drop. In fact, we're hearing from the head of the Fed, the chair, Jerome Powell. He just spoke at Jackson Hole. You know, that's where the privileged get to go hang out, and they take their fancy planes to their Lear jets. There's Lear jets in operation. Anyway, they take their planes over there and they hang out, and they get to have some wine and really bougie dinners. And you know, there's different clubs, right? Like the politics game must be an interesting one, because the higher you go, the more you realize that there's no real top to the ladder of politics, which I think kind of drives everything. Yeah, we could say it's money and that it's kind of what drives thing. But at the end of the day, I don't think it's actually about money. It's more about status. Once you have a certain level of privilege and money, it becomes about status next to other peers, right? So point being, I think they're just trying to one-up each other when it comes to influence, just to have a higher status. Something you also see in crypto. Once you've gotten the money, it's about followers and trying to get people onto your project for whatever reason. And then you reach the secret societies at the top of some of these political ladders. And then there are secret votes in there that we are not privy to, many of us. And point being, the depths of all this is kind of unknown to us. And they get to go over to Jackson Hole and listen to Jerome Powell. And now he is doing exactly what the investment markets kind of wanted to hear, and talking more dovishly, in fact, and basically painting the picture here for a rate drop in September, which has been widely accepted until this past week when we saw Bitcoin drop off. Talking about the employment market and how it looks like it's going to be suffering potentially here. And that's what's going to be driving this renewed sense for dropping the rates. So they have had dual mandates, right? Inflation, which are fudge numbers, and employment, also fudge numbers. For example, they don't count folks who are not looking actively for jobs. So how do we count unemployment when we're not talking about the true unemployed or homeless people, for example, who might not be going to their website and filling out certain forms that private corporations look at to determine who's eligible for this and that. Anyway, it's just a complete sham. But what's going on here is he's saying that basically tariffs are going to be, this is funny. Fed finally signals rate cuts are coming. And guess what? Top 10 coin pumped the most? ETH, probably nothing. So basically saying that tariffs, while they might have some sort of effect on inflation, obviously, they will take probably more time than we might think to work themselves through the economy as supply chains adapt. And what's more important right now is employment. So using that as the base case for why this September rate cut may be in play, therefore driving up risk assets such as cryptocurrencies even more. Downside risks to employment are rising, he said. I actually watched the entire, it's only like 22 minutes, the entire speech that he did, so you can check that out for yourself. They even had a link on their own website over to YouTube. Oh man, I remember when governments wouldn't, and other entities wouldn't just post to YouTube, because that's also a private company. They would instead try to devise their own media player on their website and host it themselves, which kind of made sense, but clown world. Anyway, if those risks materialize to employment, they can do so quickly in the form of sharply higher layoffs and rising unemployment. That alone would bring down inflation. So you can see in a way why they might be focused on labor market versus inflation in some ways, at least trying to make us think that's what's important. Because if people don't have jobs, then what kind of money are they going to be circulating through the economy? I guess it makes some sort of sense. Vinny Daniel had this to say on some of what Jerome Powell had to say. Powell said the Fed has adopted a new framework that removes a reference to the central bank seeking inflation that averages 2% over time, and one to it making decisions on employment based on shortfalls from its maximum level. So I think this is important, and this is crucial, because Vinny Daniel said, let me translate, if you don't own assets, you better find a way to get some, and fast. It's always been the case. I don't necessarily agree with that this is something new. What is new is that the Fed is focusing on employment shortfalls here versus that 2% target. Something that we did see after the pandemic. The Federal Reserve was instead going to be targeting 3%. And whatever number works for them, right? They're going to be data dependent. And now they're maybe moving away from this 2% level completely. They know they can't control this thing. Might as well give the market what it wants, right? And we're seeing this also in the target rate probabilities for the September meeting being reflected, that this could be happening with rates coming down. We don't know for certain. They might stay the same. They could go up, I suppose, although it's not something Jerome Powell alluded to at all, as he changed some of his language in his speech quite a bit to be more dovishly. And he doesn't like to surprise the markets. Markets like uncertainty. Don't like uncertainty. So if this is what the market is expecting, 84% chance that we're going to be dropping rates by 25 basis points come the September 17th meeting, which is, I believe, in about 24 days, then it's unlikely he's going to want to surprise in just a month. So we very likely could be seeing that, although the market is also predicting that we could see potentially about a 50% chance that we could drop down in October as well. So maybe even more rate cuts as we go out towards the end of the year, totally possible. Even higher chances of that as we move towards the end of the year. So we probably could be seeing 2 rate drops by December. Then you have the folks out there like Road Rider who point out, wonder how soon until markets remember the start of a Fed cutting cycle marks top. So it marked the top of both the dot-com bubble. He pointed at that on this chart of the S&P 500 index and also the Great Recession. This time is different, though, obviously. I mean, yes, obviously it is different. There's so many reasons why it's different. But also it could drop because, I mean, this is partially a bet with these risk assets, is a bet to get ahead of the herd, ahead of the line, and front run these rate cuts by buying it early. You're seeing this with treasury yields coming down, sell off of bonds going on. People try to front run these things. And so we have a short-term correction is usually what happens before the inevitable rush because of lowering interest rates creates when it comes to loan demands, when it comes to actual inflation and money supply that does drive these prices up exponentially over time. The exponential nature of this inflation might not be obvious because we're still kind of in the early stages of the exponentiality. But as the curve starts steepening, that's really what drives these coins up to price discovery. Infinity? We don't know. That's what created this crazy hype in 2017 and to a lesser extent like we saw in 2021. We don't know. We just know that number going to go up, right? NGU, baby. So other things rallied as well. We had stocks overall go up about 1% today. We had crypto-related stocks going up a lot. We had Circle leading the pack, the creators of USDC coin, 7% jump. eToro and Marathon Digital climbing 6%. Coinbase shares rose 5%. MicroStrategy or Strategy, I don't know who wrote this article. Come on, CoinDesk. Come on. Strategy, which holds billions in Bitcoin, gained 4%. Robinhood advanced 3%. And I haven't verified this today, but I had read that BlackRock now is the largest Bitcoin holding entity in existence. Can anybody verify that here in the chat? What's up, Renee? The ETH targets from giants like Standard Chartered banks are $7,500 for this year. Yeah. I mean, that's actually a low price compared to some of the other estimations I've heard from traditional incumbent financial institutions. So yeah, I mean, 7,500 would be really nice even from here, but I imagine it could climb much higher if we get even near that level. I imagine we wouldn't stay there very long, but I could be wrong, right? Anyway, we'll see. At least 7,500 being a conservative estimation would be my bet. But yeah, not financial advice. Of course, crypto goes up, crypto goes down. Emotions matter. We're still people. And some people haven't been in this market long enough to be able to weather these storms. I remember reading a post about how there are certain qualities that it takes to be a diamond hand holder in crypto that a lot of people just don't have. I think you can develop those over time, but you have to get punched in the stomach enough. I know I have. I know many of you guys have. I know you have, Renee, for sure, if you've been in crypto for any length of time. So yes, there are certain qualities that you have to have a certain level of apathy, even when the price is going up and down. I have developed that. I mean, it's so easy to get euphoric when the price goes up that I'm, I think, in a better position to hold on to more of what I still have over all these years. Anyway, yeah, that's important, right? Emotional regulation. And that matters. We have to talk about that. We're still people. Kanye West launched a crypto token. I don't even know why I talk about this, but I have to mention it because it was a story this week. And I do try to mention the main headlines going on in crypto. So he launched a coin on Solana because, as people have said, and no shame to Solana holders. I've held it as well in the past. I just try to see where the best opportunities are at. I don't believe it's in Solana unless you're trying to buy certain coins before everybody else does, but everybody else is trying to do the same thing. So you build a fundamental real project on Ethereum, but if you want to make a meme coin or a scam coin or a degen coin, now you do it on Solana. So Kanye West went ahead and did this. 94% of the supply was controlled by insiders. This might be one of the most extractive events in crypto. So like, how extractive can we make this event, right? Who's going to do the 98% extractive one? That's what I want to know. So Kanye's relationship, right, Star Platinum here in this thread, with crypto started in chaos in 2014. A team launched Kanye West, a Litecoin fork with his face. He sued them into the ground, killing the project and calling it a scam. At the time, he wanted nothing to do with crypto. Then came the change in 2020. He talked about Bitcoin in his presidential run in 2022. After JP Morgan froze his accounts, He showed up in a Satoshi Nakamoto hat. He said Bitcoin fixes this, and he started talking about self-custody and censorship, something that I think the video gaming community should really get around. I've been a gamer since I was a wee tot, Nintendo, 1995. I got my first console. PC gamer since 1997. And within these communities, I have just seen such a vitriol and hate for crypto because we've had so many projects try to create some sort of crypto gaming thing that just tries to extract again from users, and that's created a lot of hate for crypto within the community, while they try to figure out their ways around Visa and MasterCard censoring games and controlling everything because of this Project 2025 idea that supposedly was spearheaded by Collective Shout in Australia. But we find, again, the tendrils run much deeper of control. Instead, they try to find some other way around Visa or MasterCard or appeal to them. Please, Visa and MasterCard, I thought you guys were the good guys, instead of realizing what the real goods of holding crypto are. Again, self-custody and censorship. At least Kanye West started to understand that after being blacklisted. But, I mean, he was going a little bit crazy, and probably is a little bit crazy. Remember the Nazi thing that he did? I don't forget that stuff. That shirt. God. Anyway, I'll move on. His interest in crypto intensified in early 2025. He started following some crypto influencers and hinted at launching his own coin. Rumors spread about Kanye launching a meme coin after Trump. Days after Libra, he revealed a shady, I talked about this on the show too, a shady Twitter DM offer, $750,000 up front to post, $1.25 million after 16 hours. Post had to stay up for 8 hours shilling this scam and then claim I was hacked. So he shared that screenshot. Everybody talked about it. Wow, what a great guy, right? During these days, Kanye's team was reportedly reaching out to top crypto figures seeking advice on launching a token under his brand. I mean, everyone else is launching a coin about him or related to him. Why not launch his own scam coin? There were even rumors that he had sold his account. I remember that one too. Until this week, when he created a new Twitter account and officially announced the launch of his token. YZY. Okay, the timeline exploded. Within 40 minutes, the token had hit a $3 billion market cap. That surprised even me, not gonna lie. That's when the real problem started. Insiders held 94% of supply on day one. Yeah, he's showing a wallet there. I've seen many reports linking different wallets to insiders who dumped immediately. Rug pull for a reason. Profit over $1.5 million in minutes for this one account. Then videos came out showing the possible team behind it. Right now, the token is down over 66% from its $3 billion peak. Over $22.5 million have already been extracted by insiders. Another brutal reminder that in crypto, crime is still legal. What will happen to Kanye West and YZY? I'll tell you, it's going to continue to trend down towards zero. Don't know if it will ever hit zero, not within our lifetimes, but it will trend down towards zero. And if you put all your money in it, your money basically is going to be zero. But the thing is, you have this whale, right? This ZYZ whale with insiders coming out, and then you have all the little fishies trying to profit off of this project. So sure, they know it's not going to go up forever. They know it's not a great project. It's not a real investment, right? They're just trying to trade this thing and front run everybody else. But yeah, good luck with agents now and some expert coders out there who are probably going to get ahead of you in line before you can even click a button. I remember my stepfather talking about being on this sports memorabilia bidding app that he was using, that he had been getting into to buy Mike Tyson gloves and stuff, and how he was just sitting there waiting for this thing to come out and then trying to click, but he was always he didn't understand how people were clicking quicker than him. Bots, man, just bots. That's where we're at with the internet. So you're not going to probably be quicker than anybody else, unless you have some sort of insider information or access before the green button gets hit. But anyway, one of those who's trying to take advantage of this coin was Andrew Tate. Not going to give an introduction to Mr. Tate here, but it looks like he's had over $700,000 in losses on Hyperliquid after trying to short a 3-time leveraged short position. A $16,000 loss on the position. I thought it was a $700,000 loss. Whatever. cumulative losses are nearing $700,000 on his single hyperliquid account that is linked to this project. So, I mean, yeah, trying to short Yecoin or whatever, or YZY coin seems like a good bet. In fact, I actually took that one with Trump, but it's still a bet. You don't really know where the prices are going to be going. So it's a reminder of trading on leverage. Even if something seems like a sure bet, it's going to drop. Insiders are going to drop it. Still shorting might be because of the crazy volatility. Who suddenly comes in and buys a bunch? When you're an insider who sold a bunch, you still have a bunch of money now that maybe you want to trade in and out of your coin and become a market maker of, because, right? So just be very weary out there. And I can't say I'm really sorry for Mr. Tate here, him specifically. But Monero is a coin that has been in the headlines over the last couple of weeks. I'm not sure if you guys have heard the news, but of course I have to share it. So one of the leading privacy coins, and you can see here it's down quite a bit. Over the last 30 days, down 14.5%. Last 14 days, 1.9%. So it's recouping some of its losses. In fact, it's up 2.8% on the day, and it is up 13.2% over the last 7 days, although it is still down about 50% off of its old all-time high. So you have coins like Bitcoin hitting all-time highs. You have Ethereum, looks like it wants to get ready to hit new all-time highs repeatedly. Many coins, but Monero has really struggled here. And just when it looked like things were going to turn around, you had this company come out and claim that they had 51% attacked Monero. So then you had exchanges like Kraken. We have paused Monero deposits after detecting that a single mining pool has gained more than 50% of the hash rate. So potentially opening up the chain to reorganization, changing the history of blocks, and something that is just the antithesis of crypto. Like one of the biggest fears used to be your chain getting 51% attacked. Cubic claimed that they did that. There was disputes about that. So this was a segment from Cointelegraph. Developers dispute successful attack claim. The claim drew immediate pushback from developers who argued that the reorganization alone does not prove a successful 51% attack after they had reorganized 6 blocks. Sarai Dex's lead developer Luke Parker said in an X post that a 6-block deep network reorganization with block orphaning does not mean a 51% attack was successful. I mean, it kind of does. It does mean an adversary with a high amount of hash got lucky. A 51% attack is when a single entity controls over half of a blockchain's mining power or stake, allowing it to rewrite transactions or block them entirely. Zhong Chenming, the co-founder of crypto cybersecurity firm Slowmist, said in a Tuesday X post that this time the 51% attack on Monero seems to have succeeded, adding that the cost was also high. It's unclear what the economic benefits of doing this are in the end. In theory, the Cubic mining pool can now rewrite the blockchain, achieve double spending, and censor any transaction. So you can see why there might be distrust now in the entire blockchain. Certainly from exchanges, right? Imagine you get deposits and then those deposits were changed because some sort of mining entity decided to rewrite things. You wouldn't want to accept that coin. We've seen this happen in the past with smaller coins. Monero is not a small coin. It's still in the top 50 here. Thank you, Bit64. I just saw that the green pop out here on the left because you had sent a tip. You're always supporting, man. I can't thank you, man. I appreciate it. Hope you're holding some ETH, man. Or at least Bitcoin. I mean, whatever you're holding, you're probably doing all right. The market is positioned to do quite well, I think, overall. Unless you're buying, I guess, YZY. That's definitely more of a gamble to me. Thank you for that tip, man. I always appreciate you. And Jackknife, you had a question. What was your thought process when you made your first crypto video? What made you want to do it? Good question. I've said it before. I'll answer that real quick before continuing. And that was that I had a degree in theater performance. I had graduated from in Miami, and I was doing some local community theater. I was driving Uber, and one of the Uber drivers said, if you want to be an actor, if you want to be in movies, if you want to make it in LA, you have to have some sort of social media following. So you have to make an account, and you have to post, and you have to do that consistently. So I was trying to figure out what that would be, whether that would be gaming videos or doing like piano videos. So I tinkered with all of them. And then while all this is happening, it was like 2015. Naturally, Bitcoin, I found it. I was also interested in investing because I had an ex-girlfriend who, her father was an anesthesiologist. Her mother was also a doctor, one of the leading ones in Miami, and she lived in a mansion, and they had mad money, like stupid. You went in there and the house was like painted, hand drawn. They had a grand piano in the front. I was like, oh my God, geez, I had never seen such affluence. And she just always repeated that one of the things her father used to say was to invest in gold. So I just started being drawn toward understanding gold and good investments. And naturally, once you start looking into gold, you find out about money. And once you find out about money and you find out about gold, that leads you to Bitcoin. At least that's what it was back then. And then once you find out about Bitcoin, other things started to pop up like Ethereum, which to me seemed like an evolution of the blockchain, the first real major one that I had seen with smart contracts. So then that's what drew me into that. And so I just felt like I realized nobody was talking about Ethereum at all. I would hang out on the Ethereum forums and no one was sharing videos about it, trying to explain it for the layman. So my goal was to buy ads on Instagram, shilling Ethereum to folks. I would pick specific countries, like all kinds of countries, and buy ads to show my content to them over there, thinking that it would help them. My goal was to help folks grow a following in what I thought was a niche field, like we all try to do, and obviously keep my wealth, if not grow it, in what seemed like the most certain thing that I had found just yet. Anyway, so yeah, I just wanted to share this stuff. And now there's plenty of people doing it out there. So I did struggle with that. Like, what is my purpose on this platform if I'm not trying to be the biggest influencer anymore? If I'm not trying to... Hollywood's a very different game, by the way, than what I thought. Big following does not mean crap. Let's just put it that way these days. But if that's not my goal, if I realize there's plenty of other people who are shilling these things now that exist, so what has been my goal? And oftentimes it's just to come back to just hang out with you guys, stay on top of things as well in my own investments. And yeah, it gives me a reason to look into crypto. It's pretty much just sitting there, like just letting it sit there. I think that's really the long-term game, but it's also fun to watch this play out. I'm like, what else could happen for crypto? So much good has happened. What else would there be to report on? But like you can see, it's plenty to look into almost every single week. So that's what keeps me coming back, man. Thank you for that question, Jackknife. And Bit64, I did mean to also say thank you for coming back, man. I'm glad you did make it out to this live as well. Love to see you old timers come. And I don't mean old people, although we're all getting older. I mean people who've been on the show supporting for a long time. Thank you for that. So what's going on here? Why did Cubic decide to do a 51% Monero network takeover demonstration? Because like, what economic benefit would they have from attacking a chain that they may have some sort of stake in, right? So that they actually talk about in their blog post. They say on Monday, August 11, 2025, history was made, so 11 days ago, as the Cubic protocol successfully completed its attempt to dominate the Monero network. After a month-long high-stakes technical confrontation, Cubic reached 51% of Monero's hash rate dominance, successfully reorganizing the blockchain. This event marks a pivotal moment in the crypto industry, serving as the ultimate validation of Cubic's outsourced computations and useful proof-of-work models. But yes, I think it is important that we battle test these things. So they decided to do the battle testing on Monero themselves because they had the ability with their mining hash power. So Cubic was built, and partially, obviously, this is an advertisement for their decentralized AI model. They call it AI Garth. So obviously, by putting this out there, attacking one of the biggest networks and maybe even being successful, they would get a lot of eyes on their project. To achieve that, the chain was designed to be extremely lightweight, running out of the RAM of its validators. So validators reminds me of the old days, using our hard drives to mine and stuff like that, or RAM on our phones to mine this coin or that coin, Beam, Grin. So anyway, they had all this hash power for the decentralized AI model, and they decided to point that at the Monero network. It began as a proof of concept. They talk about how they went about this and so on, but I think at the end we get more of an idea as to why they did this. So with takeover test now complete, the Monero network's core functionality remains intact. Its privacy, speed, and usability have not been compromised. However, the end goal is for Monero protocol security to be provided by Cubics miners. So they definitely want control of the network, and they want to control the network with their miners, which is not decentralized. Do they not realize the value is in decentralization? I guess plenty don't, right? Depending what they're buying, and you've seen people buy. So I think they're not really understanding what they're doing here on a bigger level. But they had the money to do it. They battle tested the network, and I think it definitely has taken away some sort of trust and reputation for the network, the fact that you could have an entity like this. And this goes ahead and shows us why security is important, why you want more validators, why the price to attack a network is important, that it is high. So at least we got that out of this story. And I do wonder how this kind of shakes out. It's only been 11 days and I don't see much. I think the price is just trying to balance out while it figures things out. Something tells me, though, that this was kind of a shot in the Achilles heel for Monero. But decentralized networks are very resilient, and you can have miners suddenly come out and point their hash power over to networks in order to strengthen them. So this was kind of a maybe anti-fragile thing that could have happened. So it could go either way, and I do wonder how this shakes out. And I wanted to share this segment here as we get towards, hey, Marcel, good to see you. Everyone else who I haven't said hi to, Ayaz, Alexander, hello, Mr. Meaner, what's up? Thank you guys for joining me today. And everyone who watches this and didn't get a chance to make us live, thank you as well. So this was posted by Hodorny on Crypto Markets a day ago. So there was this story about a Bitcoin whale dumping their bags on-chain, verifiable for Ethereum. So BTC whale dumped their Bitcoin bags for Ethereum position. $76 million sold and 68,000 ETH bought. Why? That's the title. So just saw some wild whale activity that has me thinking about what's really driving these moves from Bitcoin to ETH. The latest whale move, a Bitcoin OG who held for 7 years, just sold 670 Bitcoin, $76 million to go long on Ethereum. This whale had been sitting on approximately 14K BTC, worth over $1.6 billion since buying from Binance and HTX way back in the day. Instead of just holding cash, they immediately opened 4 long positions totaling approximately 68,000 ETH. Most of it on 10x leverage around the $4,300 mark. Damn, they're doing good today. This isn't isolated. Bitmine Immersion, so that's Tom Lee's company with their treasury for Ethereum, just added another approximately 52K ETH to their treasury, bringing total holdings to 1.52 million tokens worth $6.6 billion. Again, they're trying to accrue 5% of the total supply for Ethereum. They were, $6.6 billion. Institutional wallets were buying up approximately 9K ETH each, $38 million during recent dips. Other Satoshi-era whales have been moving massive amounts of BTC after years of dormancy. You always hear about, oh, this wallet woke up, right? So why the shift is happening? Timing matters. This happened right after Bitcoin hit its new all-time high of $124,000, and ETH almost reclaimed its 2021 high of $4,878. Smart money often rotates between assets at these levels, especially trusted assets, blue chip assets in crypto, I would say. Leverage opportunities. You can't really leverage BTC the same way institutional players can leverage ETH. These whales are opening massive leverage positions because they see more upside potential in ETH. Institutional infrastructure. This has been being built up over the years since Ethereum came out. Ethereum has better institutional tools now. DeFi protocols, staking yields, corporate treasury strategies now all favor ETH over BTC for active management. It's just easier to do things. That's, again, one of the reasons I even started talking about Ethereum and making these videos, because how much more you could code in Ethereum and create that would benefit Wall Street and average people alike. Market maturity and AI, right? And AI. The Internet of Things was a big topic I used to talk about back then. If you guys remember, with Slockit and the DAO. Oh dear. Market maturity. Crypto analysts say OG Bitcoiners selling is actually healthy. It shows new buyers entering and markets maturing. The money isn't leaving crypto, it's rotating. I used to call this sloshing around also. Risk versus reward calculation. When you've made 1,000x plus gains on BTC, taking some profits to bet on ETH's next move up makes sense, especially when ETH has more room to grow percentage-wise. The reality check not all these moves worked out immediately. The whale's ETH positions went underwater after opening, dropping to $4,080 and putting 3 positions close to liquidation around $3,700. But that's the point. Whales are willing to take these risks because they see ETH as having more upside potential than BTC at current levels. I mean, if they were just truly gambling, it's true. They would have just gotten YZY rather than going into ETH. What this means, we're seeing a rotation from store of value BTC plays into growth asset ETH plays. Whales who made their fortunes in BTC are now betting that ETH will be the next big mover. This isn't about BTC being bad, it's about opportunity cost. When you're sitting on billions in gains, diversifying into the asset with better risk reward makes sense, or just diversifying in general, even gold, right? Anyone else noticing this pattern of BTC profits rotating into ETH feels like we're in the middle of a major capital rotation. I feel that. I actually had tweeted about that last week, so I actually agree with that one. And also, I wanted to point this out as we reach the end of this video, which I think hopefully has been informative. I tried to cram these as much as I can within about 30 minutes every single week. Hope to have you guys back on Fridays when I usually do these. I didn't get a chance last week. I was exhausted. I was doing kung fu, teaching a bunch of piano drum lessons, and I was still monitoring things, but push came to shove, decided not to. I needed a bit of a break. But we're going to be back again next week if all goes well. At least one Bitcoiner gets kidnapped every week. I think this is interesting. So you have Alina Vranova, founder of Satoshi Labs, warning of increased wrench attacks, physical assaults, and abductions carrying out against Bitcoin and crypto holders in an attempt to steal their private keys. Every week there is a Bitcoiner, at least one in the world, who gets kidnapped, tortured, extorted, and sometimes even worse. And I think this is of note because you might think, well, I don't have huge bags, right? I'm just out here shilling small coin over here. I got $600. She warned that even small crypto investors can be on the radar of violent criminals looking for a target. What seems to be a problem only for Bitcoin OGs is not really the case. We have seen cases of kidnappings for as little as $6,000 worth of crypto, and we have seen people murdered for $50,000 in crypto. So just be very, very careful with where you talk about these things, and that might not be even enough to protect you because of data leaks from centralized crypto exchanges. We're all forced now. It wasn't the case when I first started the crypto. It might sound unbelievable to people who came in after 2016 or 2017, but you could go to most exchanges and sign up without giving all your information. In fact, if you had to do KYC, know your customer information, fill that out, share your address, phone number, all this stuff with an exchange, everyone would go somewhere else instead. This was seen as a honeypot for hackers, but more and more regulations have forced it around the world to be the case that you have to fill out that information, which inevitably gets hacked. We currently have more than 80 million Bitcoiner and crypto user identities leaked online. 2.2 million of those contain home addresses. That's why you're getting mail, actual snail mail from what claims to be a hardware wallet that you might be using. That's why you're getting these sorts of emails you never signed up for because of leaked information we've been forced to hand out. So it's something I still continue to fight against, KYC. It's a terrible thing, especially considering all these wrench attacks that put people at risk. It's just a list of people that you can attack, right? That you know potentially have some crypto. So very dangerous, I would say, especially as we live in extortative times coming from powers that be in certain structures. And it's a good time to think about security and safety when people are suffering out there because of the times that we're living in, the times I'm living in. Ed Sheeran and Devlin doing a song that I really like from back in the day. You might remember that one. But anyway, I'll continue on here with our quote of the day. Patience is not a virtue, it is an achievement, by Vera Nazarian. What the F? That's not the quote that I had pulled up here related to patience. Whatever, we'll take this one. I had opened up two of them and I guess I picked the wrong one. Anyways, that's a show I have for you guys. I hope that you all have a fantastic weekend. Be careful. Patience pays off oftentimes just sitting pretty. It's crypto. We've already opted out if you're holding some. We're the lifeboat over here. And hopefully we can onboard more people and gain more credibility for this space that had lost so much of it because of grifters that currently exist, but hopefully have less of a voice, even if they can get a $2 billion market cap in no time. Anyway, take care, guys. Much love. Thank you for showing up. And what kind of kung fu am I doing, Nickel? I'm sorry. I just saw your question there. I'm doing praying mantis kung fu. Yes. And I am now a green belt. Anyway, I'll see you guys later. Peace.